What is up, Master Jason here. So in this video, I want to talk about what is currently going on in the market, as we're seeing a big decline in the crypto market and the stock market. And there's a lot of people making videos talking about the possibility of a recession, talking about a stock market crash, and different things like that I think some of it could be a bit misleading. Now, yesterday I did make a video where I talked about the market sell-off, and I talked about a thing called Quinitive Tightening in that video. Now, Quinitive Tightening is the opposite of Quinitive Easing. In Quinitive Easing, a central bank buys bonds to drive down longer-term rates as well. As it creates money for those purchases, it increases the supply of bank reserves in the financial system. And the hope is that lenders go on to pass that liquidity along as credit to companies and households, spurring growth. Now, Quinitive Tightening means reducing the supply of reserves. The Federal Reserve, they need to start shrinking their balance sheet. The money printing has just been going crazy, and money's been handed out everywhere. We have inflation going insane. Now, rates are expected to start going up in March. Now, how Quinitive Easing has really changed the market and helped make it grow, the best example would be to look at Apple, for example. Now, in 2018, Apple became the first company to have a market cap of $1 trillion. But now, just a few years later, if we look at Apple again, they're worth well over $2 trillion now. What has happened? What has happened is Quinitive Easing has allowed so many of these companies to just keep getting more money with low interest rates, because it's easier to reinvest that money to grow it and to profit even more off of it that way, instead of having to just pay the whole debt off all at one time. With these low interest rates, they're able to just keep growing and growing their company. And that's a lot of what we have seen. But this is also what has also led into a lot of the inflation that we're seeing as well. So with Quinitive Tightening, well, that means, hey, it's going to cost you a lot more money to start borrowing more money to grow your company. That creates a big slowdown. Now what we're seeing is things that get a bit more bearish, and we're going to see a big reset with a lot of these tech companies that have really seen large accelerated growth throughout the pandemic. Just look at Peloton, for example. Everybody didn't have access to a gym for a long time. They were buying that equipment, paying their monthly service fees. But what happens when people usually buy gym equipment when they're not stuck indoors and having to stay inside? It eventually just gets put to one side, and that's kind of it. And that's what we've seen with Peloton Stock. And that's what we're seeing with a lot of these stocks that have really boomed a lot over the pandemic. Now, looking at companies like Netflix that has done really well. Well, Netflix saw a large boom in subscriber growth during the pandemic because people were stuck inside and they couldn't do anything. Now, as time has gone on, of course, you would see a large slowdown in subscriber growth, and that's why we saw their stock really take a hit when they announced that they were seeing a slowdown in subscriber growth. Now, I want to talk a bit more about a recession possibility, which is a lot of the fear that we're hearing right now, but I also just want to talk about a bear market in general. So if you don't mind, real quick, just do me a huge favor and be sure to smash, destroy, annihilate, or gently press that like button, because it helps me out a lot with the YouTube algorithm, and it spreads these videos for people that might find it interesting. Now, there's a handful of videos that have come out talking about a recession. Speaking, for example, Jeremy Financial Education made a video just talking about how he's preparing for a recession. And Meet Kevin's made a handful of videos talking about a recession. And this has been a topic that he's been talking about more so recently. Now, I don't mean that in a way of throwing shade at those guys, because I like those guys' videos, and I would definitely love someday to collaborate with them on something. But anyways, the whole idea of a recession, though, is a topic that a lot of people have. But when we actually pull back and get a look at the market, it's a bit different of a story, and it's something that shouldn't really be so fearful, in my personal opinion. Now let's take a look over at the Vanguard Total Index and looking at it from the last 3 months. Well, in the last 3 months, we're down more than 5%. But if we were to look back at the last year, it's a different story. If the last 365, we're actually up 9.79%. And you can see the line here of where we were when we started out this time back in 2021. So we're still up quite significantly. There's a pretty big large amount of growth, which a 9% in 1 year, that's pretty good compounded. You have to admit. Now, looking over at the total index from the last 5 years, it's a different story. It's a much larger number. It's gone up 86% from where we're looking at this small little dip here that we have. Now, I mean, obviously that's a good sized dip, but in the reality, these are very common things. So looking at it from the last 5 years, we can see that we're still up significantly from where we were. And what this was here, this is when the market did crash in 2020, which quickly rebounded, did have a quick rebound after that. Now, we had another sort of situation back in 2018. But since then, I mean, we've just seen a massive amount of money printing, and at a time when a lot of the country and a lot of the world was shut down, we just still saw a large amount of growth continue in the market. And let's look over at the S&P. A very similar situation. We look at it from the last 5 years. The S&P is actually up 93% from the last 5 years. We look over at the at iShares Russell 2000. It's up about 45% over the last 5 years. We look at the Dow Jones Industrial Average. It's up 72% over the last 5 years. Now, of course, yes, I'm showing ETFs, but you guys get the idea of what I'm talking about. As we might be seeing certain industries falling and they're taking down the market with them, it doesn't always mean that everything in general is completely crashing. The market overall has done very well, and it's just all about where you're going to be placing your money. Now, you have to understand more riskier investments, you're going to sometimes get more riskier things happen to you. And speaking with a lot of the tech stocks that have seen a lot of growth, especially during the pandemic, you have to expect that at some point there will be pullback. Now, every single thing you invest into in general is going to go up or go down. And that's just always to be expected. You're never going to see a large amount of accelerated growth that wouldn't eventually slow down or decline. It's just ignorant to think that something is going to continue going up without that never happening. Now, we're seeing a lot of this with newer investors that have jumped in the stock market and the crypto market. Now, the crypto market is one that has also seen large accelerated growth, but we see a little bit of pullback within the crypto market or with the price of Bitcoin, and then it creates a lot more fear. You look over at the price of Bitcoin and you look at it from the last 3 months. In the last 3 months, Bitcoin is down 44%. That is considered a crash for Bitcoin. Bitcoin crashed from where it was 3 months ago. Now, if we look at where Bitcoin was previously before that, we look at it from the last 6 months, it's still up a little bit from where it was over the last 6 months. Now we look over at Bitcoin over the last year, and we're about ready to wipe out Bitcoin from this time last year as it's continuing to drop at this moment, and it's getting very close to that price on this particular day back in 2021. But if we were to pull back even more at Bitcoin though, and just look at Bitcoin from say 2020, Bitcoin is up 375%. And when we pull back on some of these altcoins like Cardano, for example, which a lot of you guys know I'm a huge fan of, Cardano just over the last year, this time back in 2021 to now, it's up more than 200%. But people look at more current issues and not really look at the overall time of the market. Now, there's plenty of things out there that are going to continue to go down even more, and there's plenty of other things that you're going to see a really good correction on, and there'll be a good buying opportunity. But it's all about picking what type of investment you want to jump into. Obviously, we're seeing a lot of these tech stocks going down. Some people might say, now would be the time to invest in the tech stocks. We're seeing the price of Bitcoin dropping. A lot of people say, hey, Bitcoin wiped out a lot of what is done in 2021 to now, would be a good time to buy into Bitcoin. It's all about what type of investments you're willing to invest into and what kind of risk you're willing to take. But always the safest route for a lot of people would be just to put money into one of the exchange traded funds that I had talked about a little bit ago, like BTI, VOO, etc. A lot of people put their money in those because those are a lot safer investments, and historically they do show that even though they'll drop in price, they will continue to go up over time. But keep in mind, this is not financial advice, and it's always recommended that you do talk to a financial advisor if you are looking to make very large investments and you're not sure what you're doing. Help always is a good idea, and be sure to look into that yourself. But anyways, with that being said, please like, share, comment, subscribe. New videos coming on my channel all the time. I hope you found this video useful. I'll see you all in the next video coming very soon. Thank you for watching.